Hey guys, Rich Trader here. I'm just gonna go over a quick little overview, just kind of where the market's at, kind of bias, and then also just kind of go over a couple uh, possible trade ideas and stuff like that for today, June 1st. So let's just get right on into it. Um, First thing to note, guys, is if you look at the daily chart, I know there's a lot of crap in here. Let me just delete some of this. Um, all these black lines and then red dotted lines are just new week opening gaps, and then like the CE of them, and then these gray lines across are just monthly opens. So it's just not too important. But um, what I really want to draw our attention to right now is this buy side liquidity up here, and especially hopping like the 4 hour chart. You can see we have all these stacked highs here, and here. So this is kind of my bias right now, is for a push up to this buy side liquidity up here. In the pretty short term, potentially a retracement into this 4 hour FEG, and then potentially push straight through, or even maybe just some further accumulation within here to that push up higher. So that's just kind of my high time frame bias. Just always keeping that in the back of my head whenever I'm taking trades. So the first thing I wanted to talk about was the unicorn setup we had this morning, kind of near market open. So you hop into the 1 minute chart, and you can see from above what I was just talking about, the high time frame bias is buy side liquidity above. So when market opens, you're looking for a sweep of sell side, right? Internal sell side liquidity gets swept. And then what are you looking for? You're looking for some kind of a break in market structure. So you see here, we don't get a break in market structure, right? 1 minute FEG gets rejected, pushes back down, and then we sweep sell side, and we get this break in market structure here. Okay. Now the unicorn setup for this trade comes on the 5 minute chart, right? After we break internal structure here, we break some structure and push higher. Now we're looking for the bullish entry for longs, right? So this 5 minute FEG is a beautiful, oops. So it's a really strong entry point, just because it checks all the boxes, especially if you're a new ICT trader and you're trading based off the 2022 mentorship program that ICT has released. This is going to be kind of your bread and butter here. If you do want to take it another step, let's see if we can hop back on the 1 minute chart. If you want to take it another step further, we do have this breaker block here. Let's just get rid of some of this mess here. We do have this bullish breaker block on the 1 minute chart, right? Bullish breaker. We have this bearish order block, a new low is created, pushes higher. Beautiful 1 minute breaker block, bullish breaker that additionally bounces off. And the last piece of confluence is, right, we want to be longing a discount, and that comes right here underneath this 50% fib, right in this beautiful golden pocket zone that I love to take my entries off of, 0.618 Fibonacci retracement. So this trade obviously panned out, right? And then your main take, if you did take this entry, your main take profit is going to be, obviously look to the left in the charts, and you see this. Look at all this liquidity right here, all these highs. So what can you do? You can just go ahead, draw your line across, buy side liquidity. It's my internal buy side, right? You have external up here, but this is going to be your safest take profit in reality. Long position, entering here, targeting there, and stop loss is going to be just underneath the breaker. Also, I like to use the 0.79 as kind of my last line of defense. So I put it, in case it wicks under. This is a nice stop loss, and we get a 4-to-1 restored ratio. So that's what you call a unicorn setup. It checks all the boxes. Really simple, really basic. But you also don't see it all the time, right? It's not extremely rare, but when you do see it, it's something you want to be aggressive on and take that entry. Cool. Next thing I wanted to mention was just kind of how cool new week opening gaps are. So obviously this is the new week opening gap from the most recent week, right? You can see that here, new week opening gap. You can see obviously rejection off the CE, rejection off there, but this right here was just the end of day push we had. You can just see why the new week opening gap is such an essential tool you always want to have on your chart, especially the most recent one. You can see here, rejection off CE, you push up above it, holds it, rejection off the highs, pushes to the lows, bounces off the lows, continues higher. And the only thing I did with this is I took a trade here. Obviously my bias is bullish, so I'm not going to try to take a short here when I know buy side liquidity is right there, right? Theoretically, if I wanted to be aggressive, we have a higher high here, we have a small market structure shift here, right? You could have tried some kind of aggressive short somewhere in here, maybe this FEG here, but it's just kind of a risky play for me. So what I really liked was I saw these lows here as internal sell side, right? And once this internal sell side got swept, I was looking for it to bounce off of this new week opening gap low, and I'm not going to be just guessing that it's going to bounce. I'm not going to just take the entry off just the touch. But what I'm looking at is immediately it starts to bounce off. I'm looking at kind of where am I going to flip bias to look for a long entry, and I see that we start to break up here. I know this becomes my bullish order block. These two candles here, right? And I'm just going to go ahead and take that entry right there, right? So also plugging in my fibs, I know that there's a good chance we come down and test this this FVG right here, right? This little guy right there, which bounced. And I was a little overly aggressive, just taking off the upper end of the bullish order block. Also, something to keep note of is you want to see it hold the mean threshold of the order block. So this order block here, mean threshold is right at this FVG, and it holds it perfectly. Wicks do the damage, but that's okay, right? You want to pay attention to the bodies of these 1 minute candles. Holds it nicely. Give me good confluence once we did get this bounce up off this 1 minute FVG, 618, right? All these things. Give me good confluence that we're probably going to keep this push up higher. So I did take this entry at this order block, 24, 42.24. Came up here, marked in my 1 minute volume balance, held that nicely as well. And then I went ahead, took some profits, some partial profits here at 29, 20, 28.50, somewhere around there for 4 or 5 points, 4 or 5 handles. And then I went ahead and took the rest of my position out right in this fair value gap right here. So all in all, pretty decent trade using kind of my high time frame bias and using that new week opening gap key level, right? I don't ever really recommend. I mean, you can theoretically, you can find good risk to reward if you put tight stops on new week opening gaps, highs and lows. But obviously there's things like this where you rip right through. So I don't necessarily ever suggest just trying to long or short them off the initial touch, just in terms of like using them as support and resistance, just trades. But when you do see a reaction, that's kind of where I look for that setup to form, right? Bounce, setup forms. We get a push over here. This becomes a bullish order block. I can now take a long entry, right? And that's just gonna give me a much higher probability trade, more so than just randomly taking longs or shorts at random areas of the new week opening gaps, highs, lows, and CEs. So yeah, that's gonna do it. Have a good one, guys.